look at the fixed income yesterday, the second trading day of the week. Serious demand for treasuries. And according to some data here, average yield contracted by 29 basis points to 12.52%. That's as far as the treasury is concerned. We're looking at an auction today by the central bank. We'll get more perspectives on that. We look at the same bullish sentiments at the fixed income, at the Naira bond market. Average yield also down 32 basis points to 12.77%. Some reports says yields fell across all ends of the curve. Now we're seeing the falling fixed income yields. Let's track this with the Chief Executive Officer at Afrinvest Securities. Dijabo is live to us here in the studio over the next 30 minutes to have this two-part conversation in the fixed income and beyond the fixed income, all on Broad Street. Good morning. It's good to have you.
Good morning.
Thank you. This is a serious executive time here. The market seems, this is the time to be sitting on the desk this morning. But let's look at the fixed income, and we spoke about this. This is falling and falling yield curve. How much lower do you think we're going to fall?
Yeah, it's interesting that the dynamics...
I'm sorry, I'm going to cut it. It's a good news when fixed income yields is falling before folks out there may think perhaps what exactly it is. But we say the yield curve is falling. Well, what is it? Is it good or bad news?
Yeah, for the investor,
yes,
it's not really a good news for the investor because their return is also falling or reducing. So, but when you also look at it, the implication on a broader view, it's a lot of guys within the real sector have been clamoring for a drop in rates to enable banks focus on lending, because we've seen from a high of over 21% effective yield last year, which most banks abandon, what should be their main business, which is lending, to investing in a risk-free investment. So CBN and also looking at the government have given a guidance that they will reduce what they will be borrowing, because we all know what led to that significant spike. It's as a result of aggressive borrowing to fund the budget gap. So we've seen that based on the reduction in the amount of borrowing, we've also seen that in most of the primary market auction results, seen that in most of the HOMO results, that when you look at the level of subscription relative to the level of offer or allotment that the CBN does, we've seen that the aggressiveness, even on the government part as well as the CBN part, have also reduced. So as a result, we've seen significant drop. And when you look at the last 2 or 3 weeks, the OMO auction, which is the open market operation auction that the CBN used to mop up liquidity, the frequency has reduced significantly. So as a result, investors have to go invest in the secondary market. And like what we saw last week after the HOMO auction on Thursday, liquidity improved, is being around 500 billion levels. When if you check it from the overnight rate and the OBB rate has been around 3%. As a result of that, investors went all out on Monday, buying across all maturities. And as prices go up, you see yields coming down. And we saw that slow down on yesterday. Today, because of the primary market auction that we expect, and from the maturity, the CBN is rolling over less than 50% of what is also maturing, showing that really they don't need as much money as they usually need before. So these are some of those factors that have come together to bring down the...
So this rebalancing, is it taking us towards a single-digit region? And again, who benefits from very fast falling yield on bills and bonds?
Yes, for the traders, for those that have purchased at high level of 16-17%, is high time you saw them take profit on their portfolio. So they try to identify for instruments that are trading very low, maybe at the 12% levels. You take your profit on that, and you try to identify like the OMO that still goes for around the 13.5% levels. You still see people trying to take position in that. So you see some form of arbitraging. Once market is very volatile, it presents opportunities for the traders. that do like day trading or even on a weekly basis, they are able to make income. But for those long-term investors, we've seen most people trying to go long now with the anticipation that yields may drop further. But we also expect, looking at the dynamics of the fixed income market for this year, before it used to be like the domestic investors that play, especially the PFAs that play significantly within that space. But what we've seen this year is more of sell-off, selling instrument that's purchased at 16-17% level at like 13% levels to also invest in OMO. That's part of what we've been seeing this year. The foreign investors have been contributing significantly to the activity we've seen in the fixed income market this year.
And why are they interested in the fixed income? We have thought they are piling more money into equities.
Yeah, the fixed income is like risk-free. The risk there is limited compared to equities, though the higher the risk, the higher the return. So on the equity side, they've been able to earn significant return this year. And the fixed income part, in your portfolio, you want to have like a balanced portfolio, fixed income equities. So for the fixed income, they've been playing significantly. When you compare the yields of Nigerian fixed income market, still comparing it to the developed market, it's still significantly higher. Though they also factor in some country risk premium, and which they still feel comfortable. And when you look at the FX market, in the last 1 year, it's going to be like a year when the FX, April 27, the FX I&E window was set up.
We should be having an anniversary.
Yes, I think we should, because
I think we should have an anniversary.
It's remained at that level.
Whether it is going to be a celebration or not, but we need to have an anniversary on the 27th of April. Thanks for reminding me. I'm going to put that back on my calendar.